Let's bring in our guest, Nell Abernathy, Roosevelt Institute Strategy and Policy Vice President, and Arthur Laffer, Laffer Associates founder, chairman, and former economic advisor to both Presidents Reagan and Trump. So I'll just start with you. Nice to see you.
Good to see you.
How you like our new set?
I love it.
Right?
It's amazing.
Yeah, it's good.
Welcome. Thank you.
Thank you, Andrew.
This is a big
Becky?
write. I think it's a big write-off, probably. Or, no, not really. No, it's not. Okay.
Not deductible?
But maybe not. Not anymore. I don't think anything is. Here's where I think the real problem is, Art, and then we'll let Nell talk about this as well. But pro-growth sounds like for the economy. Then you're counting on, for lack of a better word, supply side or trickle down to help the people that aren't being helped, according to a lot of people in the political arena, right? So I think there is no appetite for that right now, at least for a large part of the political dialogue that we're hearing right now. We want to take some of the people that are doing really well and try to help some of the people that aren't doing as well. So tax cuts I don't see how that's not going to float.
Well, within this economy, the tax cuts have worked wonders. I mean, if you look at the unemployment rate, you look at participation rates, you look at that's what trickle down really is. I mean, providing jobs and all that.
I would put that more on the corporate tax issue.
Well, that was the corporate tax.
Than
yes.
on the personal tax
Well,
issue.
this time he's looking at the personal tax one, Larry is, and they're doing it as a campaign issue, and whether there's a taste for further tax cuts. I mean, just remember in '86, we had two tax rates. That was it. We had the 28% and we had the 15%. That was the '86 Tax Act, which was really cool. I mean, only two brackets. You know what those brackets are like as you go up, and it's a killer, and it's complicated. And what I think Larry is talking about here, and I wasn't in the discussions. I was out of the country, so I couldn't be. But what I think he's talking about is making the tax codes a lot simpler, a lot easier, and just a rate cut right across the board, which to me sounds pretty good.
No, you're being very patient. This is not obviously what we're hearing from a lot of people in the debate nowadays. More tax cuts. All we talk about are wealth taxes or capital gains taxes or trying to get at some of these gains that are never taxed, right?
Absolutely. I think what we're trying to get at is the idea that raising taxes on the rich is in any way going to hurt investment or innovation. That's just not based on fact. And we've actually been hearing for 30 years we need to cut taxes on the rich, and that's going to spur this trickle-down economy. And I really disagree, and the empirics backs me up here, that has trickled down or led to real wage growth, innovation, or investment.
I'll tell you, no, this is the argument I always make. When you don't treat capital well in the private sector, when you don't help companies hire more people, you don't get growth. And during the Obama years, I didn't see a lot of growth initiatives for the overall economy. As a result, we're stuck at zero for 8 years with the Fed, and anybody who owns assets ends up becoming richer, and the income gap actually got worse because of the bad policies that didn't spur any growth. Now I think you're starting to see the seeds of the flip side of that, where you are seeing wages grow for middle-income people. You are seeing a 3.5%, 3.7% unemployment. And the pro-growth policies eventually do help. And when you don't do pro-growth, you're splitting up, essentially, for lack of a better term, you're just dividing a smaller pie more equally.
I absolutely believe that we need pro-growth policies, and we need investors and we need businesses to do the things that actually grow the economy and help average Americans. Invest in science and research, create new consumer goods that serve people. I'm just saying that's not the way the investor class is currently operating. And that's not the way they've been operating for much of the last 30 or 40 years as we've cut taxes and rolled back regulations. And that's why some of these policies on the left are not simply designed to punish people. They're actually designed to restructure the economy so we get productive investment in the things that really do grow the economy.
The last person from Roosevelt didn't sound anything like no. I mean, that sounds very reasonable. And would you disagree with that? Or there are people that are never going to own 400 yachts, right? And it probably wouldn't matter whether there was some way. I know you can't believe I'm saying this, but it probably wouldn't matter if there was some way you could get at some of the money that hasn't been taxed or isn't going to be taxed, and if you had good things to do with it, where you could count on the. That's where you don't think the government.
This is where I say there are two ways of getting the money from the rich. One of them is to send the police in there, the IRS agents, boots,
Elizabeth Warren.
Yeah, Elizabeth Warren, perfectly. Or the other way is Jerry Brown, which is low tax rates, make it a voluntary society effectively. Obviously, you have to have all the rules, but a low rate, broad-based, flat tax, get rid of all the deductions, exemptions, exclusions. And you have that, you can fund static revenue. You could fund it with a 12% tax, all federal taxes, on personal unadjusted gross income.
You said
and on
static revenue, though. Ultimately, do you
That's
think
just interesting because that's actually not the evidence that we've seen over the last 30 or 40 years where we've tried again and again. I mean, the data is in on this experiment, and the experiment has failed. When we cut taxes on the rich, it does not leave us revenue neutral. It does not lead to more investment. We have the data.
Well, let me just say that Harding Coolidge cut the highest tax rate from 77% to 24%. Revenues from the top 1% went from 20% of all tax revenues to 68%. We cut taxes dramatically on the rich under Jack Kennedy. Tax revenues from the top 1% went way, way up. We did it also with Ronald Reagan, where we cut the highest rate to 28%, and revenues when the rich went up.
Okay. Explain then what do you think's happened over the last 30 years?
Over the last 30 years, we've had fairly bad policies. I mean, from 1990 on, I mean, I thought Clinton was great. Clinton was a big tax cutter. He cut government spending as a share of GDP by...
No, but to the extent that there has been a remarkable increase in inequality in this country and a remarkable lessening of the revenue coming in from the 1% over the last 30 years, what do you attribute that to?
I don't really see the huge increase in inequality myself. I mean, I think these people who have jobs were not included in the inequality numbers. Those are only tax return numbers that you're seeing the inequality measures. And what you're seeing is now a lot of new people coming in the job market at the lowest end.
I'm worried that some of the audience is just going to be is frowning and making faces when you say that you don't believe that there's been inequality.
There is inequality
over the last 30 years.
Well, there
you're saying you don't see it.
But what you've seen in the last year or two here is a huge increase in employment.
Yeah, but I'm not talking about the last year or two. I'm talking about the last 30 years. I'm talking about wages stagnating in 1980, and you can look from 80 on.
Well, but if you look at wages right recently, they're skyrocketing right now. I'm just Obama.
I would not say they're skyrocketing. They are. We had a brief blip after the immediate tax cut. Where there was this consumer spending, not supply side blip in increased wages. And that's really flattened out now at this point. And I want to be clear, not only have we seen inequality increase and the middle class undermined, but we really have seen a decline in the kinds of productive investments that we need to grow our economy. Startup rates are at an all-time low. And that's an important thing to remember when we talk about, any kind of tax increase people say is going to hurt innovation or hurt investment. We are not in a pro-innovation, pro-investment economy. And let's remember, Bill Gates, who we've talked all about, poor Bill Gates is only going to have $100 billion instead of $150 billion. He started Microsoft in 1975 when the top tax rates were much higher. The top income tax rate was 70%. So I don't think that taxes are what is going to stifle innovation or investment.
By the way, just because I've seen so much information and classification of what Bill Gates actually thinks about taxes. I just want to say, because I was the one who interviewed him last week, and it upsets me, frankly. It upsets me, frankly, to see sort of what everybody has said. He actually wants a super, and I'll quote him, a super progressive tax system. I think he's actually okay, frankly, with a 2% wealth tax. I think once it gets to 6, I think it gets more complicated for him, but not because it becomes complicated for him, but because of what he thinks it will ultimately do to the economy and what it will do to innovation and what it will do to capital formation and all of those things. So, all these people who are saying, boo-hoo, Bill Gates, and somehow this is some kind of personal thing and he's trying to save his own money, I just want to say straight up that I think is a fallacy and a myth that's being perpetrated by people who are on the other end of this.
Bill Gates sponsored an income tax initiative in Washington State. We defeated him on that, but his views are that, and his father's views are much, much more extreme than even Bill's are. He wants to go back up above 90% tax rates on people. So, but what we're missing here is, up until the third quarter of 2017, the U.S. growth rates were right in line with the Eurozone. Since that time, our growth rates are way above the Eurozone and have been and still are. I mean, the 1.8 we got the other day, 1.9 was a whole full percentage point above the Eurozone's 0.8%, and it's continuing that growth. And that's a lot of money. It's a lot of jobs.
We're judging the Trump economy on not the same. We didn't have 8 years. We have to wait till it's been 8 years for the Trump economy before we really judge how it is compared to Obama. So we'll just have to see, Andra. I'm saying that for you.
So far, it's a good start, though.